The European Central Bank just raised their interest rates by 50 basis points to 0. Not since 2014 have the bloc had a non-negative interest rate. This long period of cheap debt has led to issues that make raising interest rates a dangerous exercise. To get around this, they've come up with some interesting solutions. But could this lead to even worse long-term impacts? The main problem are the debt levels in South Europe. Today, Italy has a 160% debt to GDP ratio. Back in 2007, when that number was 107%, the government spent 4.5% of their annual budget servicing the debt. In 2020, despite their debt to GDP ratio being 150%, they only used 3.3% of their budget because of low interest rates. So with rates finally rising again, the Italian budget will be dominated by servicing their debt, impacting their and the rest of Europe's economy. Italy is not alone with high debt to GDP ratios either. France is 118, Spain is 120, and Greece is 200%. But to stop inflation and the devaluation of the euro, the ECB needs to increase their rates even more, which means that Italy would run the risk of defaulting. If they do, the entire EU would collapse under their weight. To stop this, they've implemented a policy called TPI. This allows the central bank to buy bonds of Eurozone countries, in effect reducing that country's debt burden. A version of this was attempted in the last Eurozone crisis in 2012, with the difference that the country needed to implement reforms. No country ever activated that protocol. But a protocol for getting debt off your balance sheet without any conditions? It's free money. The debt is transferred to the ECB and interest gets paid over the entire Eurozone instead of the specific country. So eventually the countries with sluggish economies will drag the rest of the EU with them, as they never need to fix their systematic issues. That's why this new policy of buying potentially unlimited debt is truly insane, and if not applied carefully, will not end well for Europe. But that's the end of this video. If you enjoyed it, please like and subscribe, and watch this video next for further elaboration why the ECB needed to raise rates.